you can't say it's good or bad. Like it could be good in some cases. So it's all about the how and the why.
Like, what have we been doing wrong in the region to advance our startup?
I don't know. I'm new to this, so I might be missing a couple of points. Startups are easy money, and by the way, you can do it in a week. It's something that's a bit old school.
So if you could help me do that, that'll be so great.
A lot of things don't work for others. We're not just money. This kind of gap is creating a problem. It's not about the idea. The idea can change. So you need to show me something.
These are kind of fun questions.
Oh, that's a hot topic. Honestly speaking, it was a coincidence, and I fell in love with it. I can't tell you exactly who.
Hey everyone, welcome to a new episode of the AI Business Show, the show where you learn about tech, entrepreneurship, business, and investing, anything related to money making. Today with me, I have Ahmed Fouad. He's an investor, founder of DINARe Ventures. Ahmed, welcome to the show.
Thank you, Ahmed. Thank you for having me.
So today we have a double Ahmed on the show, so that's going to be great.
Yeah, you can call me Fouad, by the way.
Okay. Let's start this. How did you get into startups?
Okay, so let me just start by telling you that I'm originally a mechatronics engineer.
Okay.
I just graduated from mechatronics engineering. I have the very brief career here, but then I started thinking about shifting my career, read about business, took some courses, studied marketing, business. And then it all started with a consulting firm. So the way I started into the business sector is through consulting, which for me was a really good start. I was able to look at many different sectors at the same time. I looked at a business from above rather than being focused on one function. So to begin with something like that, it helped me a lot.
Okay.
And then I guess I started with the startups in 2014. This was the beginning of me entering the digital sector.
Okay.
And I fell in love with it, to be honest. I had a plan. So I wasn't really the person I wasn't a corporate person. I never looked for this kind of job. I wanted to build something of my own, but I knew I didn't have the knowledge yet. I still need to learn. I need to experience a lot of things. So startups for me were the best approach to this. I started in 2014 with Rocket Internet, which is one of the biggest venture builders in the world. In Egypt, they had a couple of, in 2014, they had a couple of ventures. One of them, it was Easy Taxi. I'm not sure if you heard about it. It's ride hailing, pre-Uber and Careem in Egypt. For me, this was an amazing experience because here this was digital transformation, literally. So at this point, no one really knew what's what apps are, or not what apps are. Like they didn't really use apps in their day-to-day.
And Easy Taxi, we're
Maybe
speaking, that's like 2012 or 2013. When was that?
I started there in 2014.
Okay.
I think it started 2013.
No, I'm
in
just
Egypt.
I'm just asking for the date just because to show people how far this was back. So
Yeah,
people could understand that like apps weren't really a big thing at this time. We still access
exactly.
Facebook through desktop.
And even look at it from a different perspective. So taxi drivers,
Yes.
for us to convince taxi drivers to
Yes.
use mobile apps and use technology, especially that taxis in Egypt, it was a huge mess.
Yeah.
It still is kind of, but at this time it was a huge mess. So getting the user to understand how to use an app and to use it for transportation and request a ride and all of these things, and at the same time acquiring taxi drivers and convincing them that technology is better and how to use it. It was a really good experience. I worked with a lot with amazing people, and actually, this is where I met my business partner, Karim. He's
Okay.
one of the other managing partners at DINARe. Uh, I started there as a marketing specialist for a couple of months, and then I became a regional project manager. Uh, we were operating in Africa, in Egypt, Kenya, and Nigeria. So I was a regional project manager. Uh, it was an amazing learning experience. I experienced a lot of different things, all the different aspects of the business. I worked from the bottom, I worked from the top. So it was an amazing experience. I understood venture building when it comes to tech.
Okay.
Uh, and then I started experiencing different sectors. I worked in health in a company called Tabibi. Worked in food, all tech. Tabibi was not tech, it was supposed to be tech. So it was a new approach towards medical clinics,
Okay.
but we were working on tech. On
Solution
digitizing the
for it.
whole process. Yeah,
Okay.
we did some internally, but it took some time, and in the end, the board didn't go with it. They
Okay.
didn't want to go because the board were all medical, so didn't really want to get into this. So that's for the health sector. I went through the food sector. We actually were considered the first when it comes to Yamamiya. It was one of the first cloud kitchens, or the concept. We started the concept of cloud kitchen in Egypt. Not how it is right now, but in a way, it was the beginning of cloud kitchen.
Okay.
Uh, then I went into another food company and trading and B2B, all tech. Uh, all of those companies, I experienced different aspects of the business. I'm talking marketing, product management, business development, growth. I even experienced some other things like finance, financial modeling, data analytics. I even learned SQL, which is something
Wow.
that I don't
Good.
really do,
Good.
just for the sake of learning it. So I didn't really continue with it, but I just learned it to be able to do some stuff. But that's it.
Understand it basically, or make,
Exactly.
yeah.
Yeah. Operations, operational excellence, a lot of different things, business modeling, strategy. So I experienced a lot of different sectors and functions, which was really good. Uh, it kind of enhanced my knowledge in building ventures in general from all the different aspects.
Okay.
Uh, One of the companies I worked at, or actually I was more of a strategic advisor for the founder. He had a couple of companies, tech companies, one in food and one in trading and B2B. Uh, I I actually here I started experiencing the investment and the fundraising part.
Okay.
So one of those companies was just starting. They were in talks with a few investors. So I led this. I even became a late co-founder in these
Okay.
companies. So technically, I'm not a founder, but I became a late co-founder because I worked with them on their business plan, on the fundraising. I worked with them on a lot of their different things. So this is where I got introduced to this sector, to the investment sector,
Okay.
and I found a lot of potential here, a lot of things that can be done here. But still, I was looking at it from one side, from the surface, so I needed to know more. And this actually got me to the consulting part. I mentioned Karim, other managing partner. I met him in 2014. We worked a lot together afterwards, on and off, and we started our own. Let's call it a consulting or an advisory boutique. It was more of a part-time thing. We did some consulting to small and medium companies. Uh, it was a really good experience, and I'll let you ask the questions because this is going to take me to another section of what I'm doing.
Okay. Uh, do, you had a lot of experiences working with startups, working in consulting, working as a strategic advisor. Uh,
Yeah.
how did you go from and now you started DINARe Ventures. How did you go
Yes.
from being a startup founder, working in the startup to being an investor? Like, or in other ways, how did this working in startups and seeing all these views help you become an investor?
Honestly speaking, it was a coincidence in a way,
Okay.
and it started with the consulting company that I've just mentioned. So we actually got connected to a family office in Dubai. This family office, they usually invest in all the traditional investments, real estate, oil and gas, logistics, but they were very interested in the tech scene. They wanted to get into this. Uh, we first got introduced to them as consultants. So they needed advice and consulting on building some ventures or investing in others. Uh, we were very honest with them. So it's not about, okay, you want to do this, let's do it. No, we gave very honest advice. We prevented them from investing or going in some businesses. And they actually appreciated this. And they kept asking for our advice on some investment opportunities.
Okay.
This got us to think, okay, so let's make this official. Let's build something. We're managing funds. We're basically doing. We're doing the due diligence. We're doing the selection. We're doing a lot of things. So why don't we do this? But if we're going to do this, let's do it right. We decided to do our research. So this was about a year and a half ago. We took our time. We didn't want to jump head first. No, let's take our time. Let's do the research. We did the research in many different ways. We even attended a few ecosystem events
Okay.
uh, with zero networking. We didn't want to talk to anyone. We just wanted to observe, listen to everything, what's happening, what are the challenges, what's good, what's not. We did this. Uh, and we kept working on our model to work on something that captures our value. Like we have experiences, like the three of us, we're three managing partners. We all have different experiences, but we all don't have the traditional VC or financial experience.
Okay.
We all come from the venture operations,
Okay.
different aspects, different sectors, but we all come from this background. Uh, so we decided to do something that builds on this, not just build another VC.
Okay.
A lot of VCs are here in the market.
Okay.
I'm talking about the not the Egyptian market. I'm talking about the regional market.
Okay. Right.
Uh, so that's really what got us into this.
This. Okay. Yeah. You spoke, and I'm curious to ask about this. You spoke about dealing with family offices. I know most of funds in the like most of VC firms in the region go and raise money from family offices. Is that true in a way?
I'm sorry, most of what?
Most of VC firms or like venture firms go and raise money from family offices. Is that right?
VCs raise money from LPs. LPs could
Okay.
be different kinds of people. It could
Okay.
be family offices. It
Okay.
could be individual investors. It could be many different. It could be other fund of funds kind of investors.
Okay.
So nothing specific.
Okay. Uh, Going back, we got to where you became an investor and you started DINARe Ventures in a different way. It wasn't a regular VC firm. What was DINARe Ventures? If you want to explain it or you want to tell people when you're pitching it to someone, how would you pitch it?
Of course. So DINARe is an investment company. What we do is that we fuse venture building with venture capital.
Okay.
Basically, what we do, we have the venture capital arm, which is like traditional VC. We invest in very early stage startups. Uh, that's basically it. And the venture building arm, we build our own ventures.
Okay.
There's another side for the venture building, which is that we do co-building as well.
Okay.
So rather than just building ventures from A to Z, no, we work with other venture studios and venture builders to build companies.
Okay.
The thing is that it was all about the objective. The objective was to build a strong and healthy portfolio, no matter how.
Okay.
So if we can do it 100% with the VC approach, perfect. But we found that as a VC, we have a lot of limitations. We have limitations when it comes to influence on the companies. We have limitations to the pipeline itself. Like we see a lot of opportunities. What we do is that we look at the markets. By the way, we look at the regional market. We're not focused in Egypt, like I told you. So we look at the markets. We see the dynamics of the markets. What like working with the strategy of exclusion rather than being focused on one sector. No, we're sector agnostic, but we look at each market and see what sectors should we exclude
Okay.
based on each market. And then we start seeing the opportunities. Once we see the opportunities, we start looking at the landscape. So who's there? Is there someone that we can invest in? That's the go-to. Let's see someone we can empower and invest in. And we're, like I told you, we're looking for very early stage for a couple of reasons. One of them is that our main identity is venture building. So
Okay.
we need to have our influence on building the infrastructure. So in later stages, it's harder to do this. And the second reason is that you've seen the crazy valuations in the market. So
Yes.
it's not about the size of the valuation. It's more about the overvaluation, like the validation. Can you actually validate this kind of valuation? So for me, this was a bit challenging. That's why very early stage is better at this part. Even by the way, when it comes to investment, we're looking more into the underserved markets
Okay.
rather than the big ones.
So when you say define underserved market.
Underserved are markets that has great potential, a market that has a great potential, and still the ecosystem is small, not enough
Okay.
people are investing in. Like I'll tell you what kind of markets we're talking about. Levant, for example. Levant, there is Jordan, with all the surrounding. By the way, Jordan could be at the center of Levant because you know there are a lot of disturbance in this area.
Right.
So Jordan could be a center of investment when it comes to the other countries as well, like Iraq,
Okay.
Lebanon, even Palestine. And there's North Africa as well, not Egypt. I'm talking more about Morocco, Tunisia, and Algeria. These are some underserved markets as well.
Okay.
The big markets are the GCC and Egypt. Those are some of the big markets.
It's nice when we say Egypt and GCC are one of the big markets, uh, and then compare it to the size of funding that, let's say, startups in San Francisco alone get. We look at the San Francisco probably, or startups in San Francisco or New York get funding as much as all of the region together. And we still
Yeah,
consider this as like just thinking about it in that way, we still have a long way to go in terms of funding amount and startups
true.
amount to get to that phase. You so I want to ask this because I had Tambi, the founder of Propeller Ventures, on the pod too, and he speaks about because he was a builder, he was a software builder, and when he went to VC, he didn't have control over the investments he was doing because as an investor, you put your money in, but you don't drive the car, you just sit in the back and watch what the founder is driving. And I guess just mentally thinking about putting your money somewhere, not being able to be an influence is something really hard to deal with. And I guess this is
Yeah.
why you decided to go more of a venture builder slash venture capitalist instead just of a VC firm. Is that right?
100%. And actually, let me comment on something that you just mentioned. So Silicon Valley, it's or San Francisco. This is actually something that Karim, our partners, usually say. So San Francisco or Silicon Valley is an ecosystem for a continent.
Okay.
So
Yeah.
for the US.
Uh,
So you can't compare it with Egypt on its own or the GCC. So you have to compare it with the region. But why is it still not like they're bigger than the region? Because we need to be more connected. This is one of the things that I believe should happen. We have a lot of good markets, like I told you, the underserved ones. Like the region is not Egypt and the
right.
GCC. A
Right.
lot of other markets could have great potential. So we need to connect more. We need to bridge the gaps here.
And here's the stat I wanted to mention is that Africa, with a population of 1 billion, contributes to 0.7%, which is 5 billion of VC funding, while New York startups alone raised $50 billion.
Yeah.
So that's mind blowing. Go ahead.
Well, but this is
Sorry.
about to change, to be honest.
Yes,
Like
yes.
what I've been saying, this is about to change.
And this is part of the reason I focused my podcast on founders and investors in the region, because I believe the region has a lot of potential, and this is why I like to interview founders and learn more about the region itself. Uh, so you're hands-on as a VC firm, right?
Yes.
What types, like, how are you hands-on? Like, could you give me examples? How do you deal with startups? How are you hands-on? Do you help in hiring? Uh, like, uh,
See, it kind
how do
of
you help support? Just talk to me. How are you hands-on?
it depends on the stage of the company, and if it's a VC company or a venture building company, it really depends. But so for me, I believe that the success rate it's about two stages. There is the selection stage. So
Okay.
if the way you select the company, so the level of due diligence that you do, and how can you really understand the business and understand the people to be able to take such decision. And the other side is the governance and support.
Okay.
Support, it can't be superficial. We need to provide more personalized support, real support. You need to understand exactly what's happening so the governance part needs to be really good. Uh, how can we help? So if I'm talking about the standard VC approach, so this is a company that has its team, that's already has its product, so they already started. Uh, it starts with the onboarding. So onboarding for us is something that has a lot. It's not just greetings or a meeting with introducing the introduction to the founders. No, it's not about that. It's about venture building. We have it's not a program. It's more of a formula that we build on venture building. The process, the sequence, what do you need to look at, how to look at it. So we take the founders through this program or through this process to make sure they have what they need. We make sure that they know exactly what how to build a business.
Okay.
So this is something that we do from the beginning. So this is the onboarding process. Then, like I told you, the governance part, monitoring is important. You need to be able to know what's happening with your startups. Have an open channel, an open communication. You need to. It's not about quarterly reports. That's not governance or monitoring. No, you need to know more. You need to be there. You need to be a partner because this is the whole thing. This is the whole point. You're a partner.
Right.
One of the things I hate about fundraising, the word ask. Like founders, they're asking for money. It's not an ask. It's a partnership.
Right.
It's no one has the upper hand here. So it's a partnership. So I'm not going to put money in a company and then stay back and no, I need to know what's happening. There's something that's very important. And when I know what's happening, we have the capabilities. Like I told you, our backgrounds helps us to really support in the technical aspect, from a technical aspect. So if you need something when it comes to your business strategy, your growth, your marketing, we can help. If you need something with your operations, your finance, your product, we can help. So, and we can actually see the problem before the founder even asks. This is
Okay.
part of the governance part.
Do you think this is scalable? Because at this point, you're spending a lot of time with each and every startup you're dealing with. Do you think this
Yes.
could scale, enable for you to deal with probably 10, 15 startups, or do you want to stay selecting and dealing with 3, 4 startups a year?
100%. It's definitely scalable if you do it right.
Okay.
It's not about spending an 2 hours or 3 hours every day with the startup. It doesn't work like that. If you can automate or digitize the monitoring process, this is one thing that can help. You know everything that's happening. You don't need to get involved deeply in the business just to know what's happening. No, this is something that you can see just every day in the morning. Open the dashboard and see what's happening.
Okay.
So technology is one thing that could help, and we're currently working on something that will help us do this. Building the right team internally within DINARe, which is we're in the hiring process. We're finalizing the team right now. So building the right team with key positions that can do this, that can provide this kind of support. This is another thing. Building a good network, having a really good network that can help with this as well. A lot of different things that can help scale this without us being involved like on a daily basis. No, it's not about that. It's
Okay.
about quality, really. It's not quantity. It's not about
Okay.
the amount of time we spent. It's about what you really provide. In the end, and by the way, if a founder requires all this time, then the selection from the beginning was wrong.
Okay. Uh, because you kind of want to be involved, but you want the founder to take steps and move forward without you being there at every step. In a way, like you want
Yeah,
to find the balance between these.
that's why when you support the founder, you don't just do the work for them. It's not about that. It's
Yes.
about empowering them, supporting them, giving them the tools, what they need to do this, but they need to do this themselves. I'm
Right.
not going to go and fix something for them.
It's like the example of driving a car we just mentioned earlier. You're sitting next to the founder and keeping him awake throughout the ride, but he's driving the whole time.
Yeah, 100%.
Okay. Uh, so you kind of mentioned a little bit about your investment criteria. Uh, when you're looking at a startup, what is your investment criteria? Like, what do you look at to like in terms of your due diligence, in terms of selecting this startup to work with? What do you look at?
So we have this thing that we do. It's a way of validating the business in every stage.
Okay.
It's the product market fit.
Right.
We call it the business market fit. What's the business market fit? Basically, in each stage of the business, we look for the validation of the business market fit in four main aspects. The first one is desirability. So, is this business attractive and competitive? This is one thing that we look at. And you look at it in each stage. Is this business viable? And viability here, we're looking for profitability, sustainability, and scalability. So this is for the viability. Is it feasible? So feasibility here, can you do this technically, financially, based on the culture? Is this something that you can do? And the fourth one is impact.
Okay.
How can this impact, or at least does it follow the ESG standards or not?
Okay.
So you can validate the product market fit or the business market fit in each stage with a certain level of validation. Like as an idea stage, you can do this through research. When you do the research, you do some level of validation for your business market fit. Then when you do the business planning, the process of the business planning validates the product market fit. And by the way, it's not about the plan. Here, what we're assessing is the people. We're not
Okay.
assessing the business or the idea. We're assessing the people, how they think of the business, how they do their homework, how they do their plans. This is all about the people, not about the outcome of this. So even when you start doing your product, you validate based on different aspects. You have different KPIs. When you get some traction, when you get some profitability, each stage has its validation for the business market fit on all the four aspects.
Okay.
So
You
this is
speak
basically how we look at each business.
right. You speak a lot about uh, business validation, planning, doing homework. And here's a question. Do you think startups founders should do a lot of planning, or should they get to building and test their product and move from there? Which approach are you with? A lot of planning, a lot of business modeling, or building and then adjusting?
The thing about planning is that we think it's the kind of planning we did in college, or the kind of planning the consultants do.
Okay.
This is not what we're asking for. Anyone should plan. You're building a business, and you're asking for funds, by the way. So you need to show me something.
Right.
So A plan is important. It shouldn't take much time. It's all about, I need to make sure that you're looking at everything. Like I told you, it's not about the outcome. I just need to see the people, the founder. How do they think? I can't just take their words for it. I need to see some work. I need to see the research to be able to
Right.
see that, yeah, I know the market. Okay, he's going to tell me I know the market and based on one, two, and three. Okay, so write it down. I don't care about how it looks. You can give it to me in an Excel sheet. I don't care. But I just need to see that you did the homework. This is
Okay.
something I need to see. You can, and by the way, the validation of the founder is not just about the work he did. It's or the work she did. It's more about the culture and mindset. This is really what we're looking for. Because, like VCs, they invest in the future. So even if the idea is really good now, you don't know what's going to happen in the future. You need
Right.
someone to rely on, someone
Right.
who's adaptable, someone who's reliable, that when something like COVID hits again, or if something like COVID hits again, they can adapt, they can pivot. So it's not about the idea can change. But the founder, this is the person that I need to rely on.
Right. And like a lot of successful angel investors, uh, when you hear about the stories how they invested in great founders, is they looked at the founder and the character the founder has to achieve the goal they want to achieve. And the character of the founder and the persistence of the founder was a huge factor in deciding whether they're going to invest in that startup or not. So I think it's the character of the founder and what he does is a huge part of it too. Uh,
Yes.
we spoke about your criteria. I want to ask, what sectors are you focused on? Because we see, and I've interviewed a lot of founders that are interested in the fintech space. We hear a lot about fintech. We hear a lot about e-com, logistics, but food tech. But we don't see like AI startups. We don't see biotech startups. We don't see data science startups. Uh, what are you seeing? Like as an investor, as sitting in that position, what are you seeing in the market?
See, like for us, in terms of criteria, like I told you, we're sector agnostic. We're opportunity driven.
Okay.
Wherever the opportunity is based on the market. Like some things don't work in some markets and they work in others. So this is basically our approach. When it comes to the sectors you mentioned, there are opportunities in each sector. Either you're talking about the famous ones like the fintech, e-commerce, logistics, or if you're talking about AI, data science, they're all important. But it's all about the right idea and the right founders for these. Uh, we're actually currently looking at four sectors that we're looking at all the sectors, but these four sectors, we believe they have huge impact on economies because of everything that's been happening with the economy of the world right now.
Right.
So we're looking at manufacturing, agriculture, tourism, health.
Yeah.
These four sectors, they have huge impact on economies. So if tech or startups can find solutions for these sectors, this would help. This would
Okay.
help economies. And this is the value you kind of need to add rather than just it's a profitable idea or something that's nice to have. No, we need something that impacts as well. Uh, and we're also looking at it from a different angle. Let's say we have three types of economies. We have the gig economy, we have the barter economy, we have the decentralized economy.
Okay. Can you
So
explain each one of
the
them, please?
sure, the gig economy, the gig economy like Uber.
Okay.
You're providing some gig opportunities for people.
Okay.
The barter economy is something that's a bit old school, but it's some people are trying to bring it back, which is more about trading rather than using cash for transactions. We're trying to connect the right stakeholders together for barter.
Okay.
So this is an economy that could be of huge help for the overall economy. And the decentralized economy, which is what's happening today with the Web3.
Okay.
This opens it's a bit similar to the gig economy, but to a different sector or a different segment of people.
Okay. Let's go. We spoke about the sectors, your investment criteria. Let's go to the three startups you've invested in or venture built. Analytica,
Yes.
BI, Lorryz, and Immensa. Did I say them wrong?
Lorryz,
Okay,
Analytica
Lorryz. Okay,
BI, Lorryz, and Immensa.
okay,
Well, these were investments that we did in the beginning as a part of our testing phase.
okay,
We wanted to understand the market more, the dynamics of the BC sector. So they don't 100% match our current thesis,
okay,
uh, but it was a good learning experience. So we have Immensa, for example. It's a very successful company in
okay,
Saudi Arabia. It's a digital warehousing and 3D printing company. They're doing great. It's an amazing concept, but it's bigger than the current companies that we invest in. Like we
okay,
decided to get into this just to experience the big companies, the big investments. So we don't have much influence on such companies, but we have good connections and we support however we can.
okay,
So this is one approach. There is Analytica BI in Egypt. It's a data analytics company. It's an early stage company. We still see they have a lot of potential. We're currently hands-on with them, trying to help them with their infrastructure, building a better infrastructure, better strategy with their fundraising. We're becoming a bit hands-on with them. Also, as a testing phase, we need to see how involved can we be with the company and how can we support. So and Lorryz is the same thing. It's a logistics land freight, digital logistics land freight in UAE. It's in a couple of companies, UAE and Pakistan, and they're supposed to launch in Egypt and Saudi Arabia as well. So we're also becoming hands-on with them and giving them support with their infrastructure and their fundraising.
okay. Uh, have you looked at new startups? Have you invested or started dealing with new startups or
We paused and took our time, just like I
okay,
told you, to do our research. We just went to Jordan, Amman. We attended an event there, and we're going to start investing there. Like we're building a pipeline there.
okay,
Like I told you, we are looking at Levant and North Africa. And we're in Egypt, so of course Egypt is one of the markets that we're looking at. So we're currently becoming active in these markets. Plus, we're building our own ventures. We're working on a couple of ventures right now.
okay. Could you speak about them or are they still secretive?
They're still in the works.
Okay,
I can tell you one of them is a tourism, is in the tourism sector, but it's a new concept, something
okay,
new that's been in the works for a while.
okay. Uh, are there any startups you've looked at uh, and missed investing in, and now you look back and you're like, okay, I regret it.
Of course we did, but we don't really regret it. But it's just that we weren't ready for it.
Okay,
We were still building our thesis. We're building our infrastructure. So it's better to lose a few opportunities than getting ones that you're not ready for.
okay.
So we don't really regret this, but yeah, we of course we missed on some good ones.
Um, but here, let's go. Uh, we spoke about DINARe Ventures. I want to speak kind of about the general picture in the region. Uh, in one of your posts or something you shared that Egypt has received $350 million in startup funding.
Mhm.
Uh, in terms of first, are these investments local investments or foreign investors?
Both.
Okay.
We're attracting investors from all over the world.
Okay.
And by the
Uh,
way, it's mostly like regional or global investors.
Understood. Okay. Why do you think foreign investors have this trust in Egyptian startups?
See, what I believe, I don't have a clear answer for this. Like I
Okay.
don't have the actual insight, but I can tell you that the global market is looking at Egypt. Like it has a lot of opportunities. It's still an emerging ecosystem. So any emerging market has a lot of opportunities. That's why you'll find a lot of focus here. Plus, a lot of different things. You have great talents in Egypt, and the energy of the people and the founders is really good. The market size is amazing in Egypt compared to many regional markets, and the location. We have close relations with the GCC. Egypt, and a lot of investments come from the GCC, of course.
Right,
Uh, Egypt has always been the heart of the Middle East.
right.
The growth rate is really good, which showed a lot of potential. And this is one thing that investors look at: growth rate, the trends, and the potential. Uh, we also have competitive wages, and the labor cost in Egypt is more, it's competitive more than other
Yeah,
countries and markets. So yeah, a lot of different things. We have a big ecosystem. It's a growing ecosystem, but
yes.
it is relatively big in terms of investment, mentors, advisors, people. So it is a big ecosystem.
No, I agree in that I personally have a bias toward Egypt. I'm Lebanese, I'm not Egyptian, but I have a huge bias toward Egypt. I think Egypt is a large, big market. We're speaking about 100 million population. That's alone a big market. And Egypt is running fast toward digitalization. I know by 2023, or all government payments should be done digitally. No cash payments are allowed on government payments by 2023. Manufacturing, in terms of manufacturing, it could be the hub of manufacturing for the whole region. Good relationship with the
Yeah.
GCC, growth. There's a lot of great talent. So I agree with you on the unique phase Egypt has in the market.
The manufacturing sector, this is a whole other topic.
Yes.
There's a
I
lot happening right now.
Here's a theory I have, and I want to see if you agree. We saw in for a long period of time, probably the last 10 years, China has been the manufacturing hub of the world. COVID hit, we are going back kind of to localizations where Mexico now is becoming a manufacturing hub for the region. China is a manufacturing hub. India, Vietnam. I think Egypt could be a manufacturing hub for the whole MENA and GCC region. What do you think?
I think even more. Like it
Okay.
could be for the world as well, like China
Yes.
was
Yes.
or is. So,
I think that could happen. There's enough population. There's kind of cheap labor compared to other countries, and there's huge pieces of land. Like I had a founder in the real estate tech space, property management, Hamad Al Sobongi, and he speaks about that up until today, people still live on probably 20% of Egypt's land space. So we still
yeah,
have 60% that's not covered.
I don't have the numbers, but yeah, we
It's
have a lot of
so,
space here.
yes. So it's amazing. Okay. As What are your thoughts about cash burn strategies at startups?
Oh, that's a hot topic.
Yes.
Well, cash burn, it's not about the strategy. Like the strategy itself, we can't say it's good or bad. Like it could be good in some cases. So it's all about the how and the why. Like why are you doing a cash burn strategy? Is it just to raise funds? Is it something that you're going to do that's going to hurt your business just to get more cash and then you can't get out of this?
Right.
So it's more about the why and how you do it as well. Like, is it something that you're going to do long term? How is this cash burn going to affect your unit economics? So you need to think of it in different ways. And then if it really fits your business plan as a business, like if it fits your healthy business plan, then yeah, go for it.
Okay.
But most of the times it doesn't. Most of the time, the reason is not good, and the way they do it is not good as well.
Who started this cash burning strategy in the region? Was it startups or was it investors? Like who went for it?
I don't have the history, so I can't tell you exactly who, but I see that the problem is from both sides.
Okay.
So some investors they ask for specific numbers and they don't look at other numbers. Like they care about growth and they don't care about unit economics. For example,
Okay.
Uh, so this is one of the criteria of investment. I need hyper growth. So what startups are going to do is that they're going to shape their business to raise this kind of fund.
Right.
This is not the right thing. So it's on both of them. So it's on the investor that created this kind of standard or criteria, and it's on the founder who believe that this is the only way to raise funds. There are a lot of different investors. Investors are not the same. And I'm not talking about types of investors. I'm not talking about a difference between angels, VCs, PEs. No, I'm talking about even VC investors. They're different.
Right.
Criteria is different. The way they look at the markets, the business, their interests are different. So just look for the right fit. Build your business the way you see that this is going to help your business, how it can grow sustainably, and see what kind of investor fits this. So what's good for you is good for the investor.
Okay. Do you think this you're thinking about that in terms because you so let's say a fund comes in and a VC firm has raised $150 million from LPs. Well, to get a return back on this $150 million, they need high growth, hyper growth from the startups they're investing in. And this is why they needed to burn through cash, acquire customers, get new customers, raise money again to reach up the valuation they want them to reach to cover the fund. While other kind of VC ventures, they're smaller, they have the flexibility of dealing with startups without having this hyper growth. Do you think that plays a role too?
It did, but again, it's on the founder who decided to go with this kind of VC. There are a
Okay.
lot of different kinds of VCs,
Okay.
and to be honest, yeah, maybe many of them had this approach. Today, things are changing because all the controversies that's been happening in the
Right.
market lately. So people are changing their minds, founders and investors. So we're more focused nowadays on unit economics and profitability and healthy growth. So this is something that we're finally looking at.
Okay.
I understand standards were not that great before. False standards. I'm not saying that all the investors do the same thing or the founders, because there are a lot of good examples in the market. But I can say that many works with these kind of false standards.
Okay. As a venture builder, and these are kind of fun questions. As a venture builder, investor, startup founder, you see a lot. What is a
Yeah.
startup idea you want to see built?
Well, as a venture builder, I'm probably building it. So,
Okay.
but tourism is one of the things that I wanted to do, and I'm
Okay.
finally doing it. Health. I think we need something more related to health
Okay.
management tech, rather than the standard booking or insurance, medical
Ex
insurance tech,
Explain what you mean by
which
health
is good, by
management
the
tech.
way. Health management is technology that helps people manage their health.
Okay.
Uh, Similar and connected to electronic medical records, automating a lot of different things here, like vaccinations. It's a whole thing. This is
Okay.
like a whole big thing. I pursued this for a while. I'm still interested in it, and I know people who are planning on working on this.
Okay. I've been listening for the past 3 days. I've been listening. I don't know if you know the Lex Friedman podcast. Uh, eh,
No.
okay, he interviewed a guy called Balaji, and Balaji is famous for his like crypto thinking. He's very amazing guy, and he spoke about this specifically, how humans should take the lead on taking care of their health, like, and how we should change kind of how the health tech or the health industry functions now. Now we just go to the doctor, listen to what the doctor tells us, and just do what the doctor tells us. But before that, we don't do our research. We don't know what our medical record looks at. We don't know what our genetics look like in terms of what would get us sick. We don't know any of this research. So we should get to a day where we as humans, specifically individuals, could have the data of what makes us sick, what do our genes look like, how can we prevent ourselves to getting sick before going to the doctor. So it's this huge management of health individually, each person by person. It's a fascinating concept. I could share the podcast with you later on.
100%, and without losing the help of
Doctors,
the med exactly,
yes,
like medical professionals, they're important as well. Like you can't treat yourself or
right,
diagnose yourself,
right,
but you need to find a way to manage your health, to know when you need to go to the doctor, to
right,
know like you need to have a good history of your case, your health.
yes. Uh, what are you're an investor now. What are startups in the region you have your eye on as an investor you want to invest in?
Uh, I can tell you it's more about uh, startups that I'm proud of.
Okay.
So there's Mozera. You heard
Okay.
about Mozera?
Yes, I want to get the
Hussein,
I want to get the founder on the pod, so if you could help me do that, that'll be so grateful.
I'll try and reach out to them, but
Okay.
they're amazing.
Yes.
They added huge value to the sector they're working on, to the agri-tech, to agriculture. Like I told you, it's one of the sectors that are important for the economy. They've been doing great job. They're disruptive. They're supporting the farmers, changing how the supply chain works. And by the way, they're working in a very efficient and effective way.
Yes.
They're not the kind of startups that raise a lot. By the way, I believe they could have raised a lot more funds,
Yes.
but they're trying to build something real. So one of the startups I'm definitely proud of.
No, I agree. I've been following what they're doing and like, what the great stuff they're doing, and it's amazing. I think to conclude stuff, what can we do in the region, or like what have we been doing wrong in the region to advance our startup scene that we could change?
Um, See, one of the things I believe is important here is to like we talk about the tech ecosystem or the tech companies as a sector. It's
Right.
not a sector. Like it's totally separated from all the other industries, like manufacturing, agriculture. They're separated from this. This kind of gap is creating a problem. The other side, they're looking at startups as, I don't know, easy money.
Right.
The ecosystem is not healthy, so they don't know how it really works and the importance of this. They see the negative. There is a lot of negative. I totally understand, but it's important to bridge this gap because the thing is that startups are the best way to find innovation for those other sectors.
Yes.
They have the freedom they have for because of the dynamics of the ecosystem. It helps them become more innovative. When corporates start doing this themselves, it's not as easy. They don't have
Yes.
the freedom when it comes to the dynamics. So I believe bridging these gaps is very important. This is one thing. We need to enhance the standards and the behavior in the ecosystem from both sides, investors and founders. The standards about fundraising criteria or investment criteria, what you need to do to build a business. Like you mentioned something that is it important to build a business plan? I believe it is. This is one standard because in the end, it's still a business.
Right.
It's not a graduation project. It's a business. You need to build something real. You're raising funds, so you need to show investors that you did something, you documented something. You don't need to do it the consultant way. No, just look at everything, build a complete plan. And by the way, you can do it in a week.
Right.
It's not about it, it doesn't take much time, but you need to be able to, and that's also something that needs to be included in the, or not included, like the mentorship or the advisory in the market. They need to focus more on more structured advice rather than the superficial or not superficial, like I'm just telling you, okay, do one, two, and three without getting into the details of your business.
Okay.
Advice is personalized. It's
Right.
specific to your case. So a lot of things don't work for others.
No, I definitely agree. And one point you mentioned is like we take the tech scene as something that's separate. It's not. It's really an integration. Startups are there to innovate on existing industries, uh, to innovate on the manufacturing industry, to innovate on the agriculture industry, so we could improve it. Because when we innovate, when we introduce tech, we're reducing cost. We're helping the customer have a better cost. We're helping uh, the farmer sell his product faster at a lower cost. So it's startups are innovative. They're here to help the market. So this is what we should think about startups. They're not a competitor to everyone. They're
I
they're
agree.
here to help.
I agree.
Yeah.
And but let me just add one thing is that I'm new to this, so I might be missing a couple of points.
Okay.
But this is my perspective on this ecosystem and this market. I believe there's a lot that we can do here. We have huge potential. I'm talking about the regional ecosystem. Uh, let's just connect the markets together. Uh, this is one of the reasons we decided to go with the regional investment. We didn't focus on Egypt or on the GCC. No, we wanted to look at all the different markets, especially the underserved ones,
Right.
to be able to see what do they have that other markets don't, and what the other markets have that they don't, and we start connecting the dots and build a big ecosystem, an ecosystem that can actually compete with Silicon Valley.
Okay. Ahmed, this was a great episode. We really covered a lot, learned about a lot during the episode. So thank you for sharing all this knowledge. Is there anything else you want to share? Anything else you want to mention? Are you guys hiring at DINARe Ventures? Uh, where could people find more of what you're doing? How could people reach out to you?
We're starting our communication soon, so we'll be more out there. So we've been a bit on the down low. We're not saying much, but recently, because we're becoming a lot more active right now, so you'll hear a lot more of us. I think, yeah, we are hiring. We're currently looking for a few positions in venture building associates. We're going to add everything on our website, which is available, by the way, dinareventures.com. Anyone can go there. They can learn about what we do. We're on LinkedIn as well. Uh, People can apply their startups in the website as well. Uh, by the way, we even invest in very early stage, even idea phases. We're okay with this. Like I told you, we're not just money, so we have the experience to validate. So we look at the founders, we look at the people, we can validate the people, we can validate the idea, and we can give them everything they need to build from idea to launch and forward, of course.
That's great to hear. So anyone who has an idea, anyone who wants to build something in the region, reach out to Ahmed and to DINARe Ventures.
Of course. Currently, we're focusing more on Levant and North Africa.
Okay.
But anyone else has it, of course, in the other markets in the region, yeah, go for it, of course, please.
It sounds great. Ahmed, one more time, thank you for being on the show.
Sure. Thank you so much. Thanks.